Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. Today, I want to talk a little bit about why we got a little bit more risk-on attitude for the market and have a little brief chat about what I think could be an absolutely massive week for the euro. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So today, as the market is currently trading, we've got a slightly softer greenback. Slightly softer dollar. And you can see the dollar struggling or losing ground in general against quite a few of the majors. Now, this all really started from Friday onwards when we had the US retail sales, which did come in slightly better at 1%, as opposed to 0.8% expected. However, like I said on Friday, it looked good on paper, but in reality, the majority of that was also a big percentage of that number was to do with petrol and fuel. So, in other words, the market has not looked at it as in a massively awesome result, so to speak, a really good result. Now, basically, what does that mean? Well, what that means basically is that what that actually means is basically the market has looked at it in a way that the Fed will not raise interest rates by 100 basis points, okay? By 100 basis points. That's how they're looking at it, okay? Because the retail sales wasn't overly brilliant, they're looking at, no, the Fed won't be that aggressive. They're going to go to 75 basis points. To underline this, the fact of the matter is the market is currently pricing in a 29% chance of 100 basis point Fed rate hike at the end of the month. On Thursday, following that shocking CPI number of 9.1, the market was pricing at 80% chance of 100 basis point rate hike. So this is why we're seeing slightly risk-on attitude on the market as it stands. So the market's thinking, no, the Fed will not raise 100 basis points. It's only going to do 75. This is why we're seeing a softer US dollar. However, another point I want to make is don't forget, Christopher Weller on Thursday, he said, I will go for 75 basis points unless retail sales and housing data is really high. It gives them confidence to do 100. Now, we have got housing starts coming out tomorrow and building permits. So it'll be interesting to see how the market reacts to that and see whether or not that number from 29% priced in at 100 basis point moves back to 80%. So that'd be something worth keeping an eye on. But as it stands at the moment, the market is thinking, no, the Fed's only going to do 75. They're not going to do 100. And this is why we're seeing a slightly softer dollar. And we'll have a look at the markets in a minute. However, I want to talk about something else as well, which I think potentially could be a huge week for the euro. Now, remember this number 21. Basically, I'm talking about the 21st of July. 21st of July. This has a potential to be a massive moment for the single currency. Don't forget, last week, euro went under parity. It's since recovered, and we'll look at that in a minute. But I think it all comes down to this date, the 21st of July. Because what's happening on the 21st of July, James? Well, first of all, we have the ECB interest rate decision, which I will do a watch along with, because that's a huge event. Because the ECB is expected to hike interest rates the first time in over a decade. Yes, the market is pricing in only a 0.25 basic point rate hike, and for ECB to finally do something because they've been so inactive and so unproactive in this fight against inflation, unlike the other central banks. So that's going to be potentially a big event. I do think a lot of it's priced in already, because I do think they're only going to do 25. I think the bigger event on this will be the press conference, which happens 30 minutes afterwards. So that's going to be more interesting. But anyway, still, this is a major event happening on the 21st. But it's not just that. It's not just that. Because as well as that, sorry, my French try. Because as well as that, on the 21st, the question will be asked, will Nord Stream 1 come back online? And remember, this is huge. I spoke about this last week. It closed last Monday for 10 days of standard maintenance. Does this every year. This year it's different. This year, the market is scared the Russians will not turn it back on. And don't forget, this pipeline supplies Germany with 55 billion of cubic meters of fuel per year. And the EU, in fact, receives 40% of its gas via Russian pipelines. And don't forget, we have a huge energy crisis in Europe and in the world in general, but in Europe in particular. Okay, so if this pipeline doesn't come on the 21st, then no doubt, in my mind's eye, that Europe faces the real chance of a heavy recession. So anyway, that's going to be important. That's going to be on the 21st of July. ECB interest rate hike, and will Nord Stream 1 come back online? Well, anyway, let's have a quick look at see what the euro is doing at the moment. Like I said, it has recovered slightly since falling under parity last week. Currently, it's trading at 1.01472. So this is on a 30-minute chart. However, if you look on a daily, it doesn't look so dramatic on a daily. If you look on the daily, it's trading, above that key level I've been watching, 1.00716, still under the 100 and 200-day moving average. However, the RSI, this is on a daily, is between the 30 and 70. So it doesn't show that it's indeed overbought at the moment. If we have a quick look then at the cable's recovered. British pound, US dollar. Again, that's recovered on the back of that. We have got a softer dollar, so more risk on appetite. Currently trading at 1.1962. So that is slightly more bullish against the greenback. We have dollar yen. That's under pressure. Currently trading, remember, don't forget, it hit the 139 level last week after that CPI result. But now, like I say, it's under pressure against the yen. We have less dollar strength, and it's currently trading at 137.89. We look at, guess what we're going to look at next? Gold, of course, back up against the dollar, currently trading at $1,719. My level of interest, which I'm watching though, is 1,727. For it to get a real bullish momentum, we'll have to cleanly break through that level there, this level here, 1,727. What else? Oil's back up again as well, of course, slightly more risk appetite and down to the fact we got a weaker dollar, currently trading at $97.76 a barrel. So basically we have got a bit more risk on appetite, as you can see with S&P as well. That's currently trading at 3,895 points. So yes, weaker dollar, risk on, all because that retail sales is not that impressive. So anyway, what else? What else is happening? Something else is really big. Don't forget, we have earnings season now in full swing, and it's coming in a lot of the focus of the market. Today, we have Bank of America and Goldman Sachs. Don't forget, last week we had JP Morgan Chase, Morgan Stanley, Wells Fargo, and Citibank. Three of them disappointed. Only one was impressive. That was Citibank. JP Morgan Chase fell under its expectations. So did Morgan Stanley, and so did Wells Fargo. So it'll be interesting to see how Bank of America and Goldman Sachs do today. But as well as that, it's not just the banks now. Already now we've got some very large corporations releasing their earnings. We have Netflix due to release their earnings after Tuesday's close. They are expected to show that they've actually lost 2 million subscribers. 2 million subscribers. This is the expectation. So this is going to be a big event. Tesla as well on Wednesday, after close on Wednesday. That's due. But the one I'm really interested in, and I'm going to do a particular video on this, take a closer look at this closer to the time, and that is Twitter. Their earnings is due on the 22nd. And don't forget, Twitter has gone through a horrendous time with all the drama over whether Musk will buy it or not. Obviously, he's pulled out now, and now there's impending court case coming up where they're going to sue Musk for $1 billion for pulling out the takeover. But Twitter earnings June the 22nd. That, I think, is going to be a really interesting thing to look at. I'll do a lot more detailed analysis on that closer to the time. Other events coming up this week, we have UK claimant count, UK unemployment, UK CPI. That's going to be massive. They expect it to be 9.3%. Canada CPI, BOJ interest rate decision, not going to do anything. ECB interest rate decision, already priced in 25 basis point, but still. But ECB press conference, German manufacturing PMI, UK services PMI, and Canadian retail sales. So a big week ahead of us. So please come and join me for all those events. What else is happening? Well, basically, the market as it stands, like I say, risk on appetite, 1.12% FTSE up, DAX currently up 1.17%, Euro Stock 50 currently trading at 1.09% higher. So yes, risk on attitude indeed, all down to retail sales and the fact that the market is not expecting now 100 basis point. But like I say, that could all change just like that. Anyway, don't forget you can ask me questions anytime you wish, whenever I'm online. Please do, or just maybe simply say hello. This is Tixee Live after all, and live does, of course, mean live. So please feel free to ask me any questions. Just on another note, don't forget, I will be doing a watch-along for the ECB interest rate decision. I'll probably do another watch-along as well, maybe for German services PMI, because I think that could be quite interesting. Because like I say, as the 21st approaches, it's all about Germany's economy, because this is a major deal for Germany. And don't forget, Germany is Europe's powerhouse. So it'd be really interesting to see how that turns out. So please feel free to obviously join me for the ECB watch-along. But like I said, I'll let you know whichever one I'm going to do as well. Okay, if there's no questions, don't forget, if you think of a question later, just put it in the comments on either Facebook or YouTube, and I will see it, and then we'll answer the question next time I'm on air. So please feel free to do it that way. Okie dokie. Right. Anyway, don't forget, I'll be back online again this afternoon at 1 p.m. UTC. Till then, if you're watching me on Facebook and you've quite liked this little episode, by all means, give us a follow. If you're watching me on YouTube and you've quite enjoyed this episode and found it useful, by all means, subscribe. Hit the notification button so you know next time I'm going live. If you found this episode interesting and useful, and more importantly, you put up with me when we're over the top enthusiasm about the market, I can't help it. I love the markets. Then give me one of these. You can see I've got a couple already, which I really appreciate. I really appreciate that, because I like to know if you're liking what I do. But anyway, till next time, or till later this afternoon, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.